Earlier this morning, I mentioned the fact that we had opened up and immediately taken out that 26,000 level on the Dow Jones Industrial Average. And last I heard, we are still there. Let's take a live look in New York. And sure enough, well, now I say that, and it dipped right below it. It's up 195 points right now at 25,998. Just needs a little bit of oomph, and it would be right back up there again. But anyway, right now, about 3 points under that 26,000 benchmark there. So it's flirting around, trading on both sides of it today. The dollar value did go down this morning with the big rise in the Dow. And on the dollar value on the futures, here's a look at the dollar index. We are down 280 points at 90.460. So a big drop in the dollar there. On the crude oil trade this morning, too, a lot of interest in that with the high crude oil prices recently. And right now we have February West Texas crude down 8 cents at 64.22. We had a firmer start on the grain trade this morning. And as we take a look at the corn and soybean markets, here you have the corn. It opened up about 2 higher in the early morning trade. And right now we're only 3/4 higher on the March at 347. On the soybean trade, as we switch over there, we have the March contract 8 1/4 higher at 968 3/4, so hanging on to the majority of its gains. In the wheat trade in Chicago wheat, we have the March contract now trading at 416. That's down 4.5 cents on the day, and basically about a little over a penny off of our low of the overnight trade. The Kansas City market on the wheat, we have the March now 3 1/4 lower at 423. And if you look at Minneapolis wheat, you have the March contract down just 3/4 of a cent at 612. And the cotton market, that was one that had some really big moves here recently. It is down 60 points now at 81.08 on the March contract. Let's go to Chicago and talk for a little bit with Todd Bubba Horwitz of BubbaTrading.com. He joins us right now. And Todd, thanks for joining us here on the first trading day of a short trading week. What do you think might happen here today? It's going to be one of those compressed trading weeks again.
Good morning, Marlon. Well, I think you're seeing, kind of the residue left over from the USDA report. Corn has been, a little bit higher, but basically flat. Soybeans are a little bit higher, and wheat's under still some pretty severe pressure, but still above the contract low, where corn did make a new contract low. I think we're going to start to see markets move a little, but I think what we saw in the equity markets is a little bit more volatility all of a sudden. Even with the markets up as much as they were up, you're starting to see the VIX climb a little bit. So maybe we're going to start to get a little bit of volatility and start to see a little bit of actual trade and see some fresh new money coming into the grain space, which is kind of what I'm looking for anyways. That'll kind of push these prices a little bit higher. I think that corn is a pretty solid base. I mean, I'm an owner. I bought into the report and will continue to stay there. I don't see a lot of downside. I see a lot more upside going forward. So that's how I would look to play this right now.
From what I understand, the large commodity funds had sold about 13,000 corn contracts on Friday and 11,000 on the wheat. And I know last time I spoke with you last week, you were pretty friendly on the wheat at that time, thinking it was probably pretty near some long-term lows. What do you think here today now?
Oh, I look, until they take out the contract lows, I'm going to continue to stay in and continue to buy. Now, if they do take that out, I'll have to reassess. But I think that, what we see here is the markets that still, even on the report, we didn't have tremendous volume. We didn't have a real big spike. So what we're seeing, I think, is still the big funds are still trying to push these lower by adding in more contracts. And I think what's going to really happen is I think they're going to get themselves trapped because we're going to get some news that will bring buyers into this market and force them to cover, pushing prices higher. That's how I would assume and play this. I don't see a lot of risk to the downside. Obviously, we can go lower, but where's the end going to be? But I do see there's a lot of potential to the upside, and that's the way that I want to see to play it. And that's where I think you can make the most amount of money, or if you're in the business, you get most of your money back. And I think that's what we're looking for.
And the trade was somewhat surprised when that report came out Friday showing the all wheat planted or the seedings acreage over 1 million acres above what they had expected to see, about the same as a year ago, and that kind of caught a few off guard. Todd, I'll bring you back here in just a moment, and I want to get your thoughts on our livestock trade. We started out firmer. We'll see how they're doing in just a moment. Well, what do you say we take a look at our livestock trade along with Todd Bubba Horwitz of BubbaTrading.com in Chicago, and he rejoins us right now. Now let's go ahead and get everybody updated on our prices here on the cattle and the hog trade there in Chicago, where we have live cattle on the February contract now at 118.05 per hundredweight. That is still 67 higher on the day. We have April trading 60 higher at 120.05 per hundredweight, and you have your June live cattle up 23 cents. We're at 111.85. And you will note that the nearbys are leading the way higher. Just wanted to point that out. Now, looking at the feeder cattle trade. On the feeders today, we now have the January up 47, March 45 higher at 143.10 per hundred. That is, I want to note this, it's $1.05 off of its earlier high this morning, though. So it had a big surge in the beginning and kind of fell away from that. April now 22 higher at 143.22 per hundredweight. Then on the other hand, you look at the lean hog trade, and on the lean hogs this morning, we now have February trading $1.27 higher, a big surge here in the hogs, triple-digit gains on the first 4 contracts. February now at 72.85, that's on the high of the morning. We have April up $1.23 at 75.55, only a nickel from its high of the morning. We're $1.05 off our earlier low. So, Todd, I want to start on the hogs here today, since they're having such a big move. Percentage-wise, have you heard what is driving that market all of a sudden this morning?
A lot of people are buying them right now. we got, you know what? They broke below, and I think you're getting a little bit of short covering here. I think you're going to see, they're trying to first of all close that spread between Feb and April, and I think that you got down a little bit too fast at the end of last week. I would expect to see possibly 74 in February and 78 in April, but I am looking for lower prices. I'm more looking towards to be friendly at about 70 in April is where I'm going to step in and want to be a buyer again. I think that you're going to see this selling pressure start to kick in here fairly quickly. This is, to me, more of, again, a quiet market movement, and with lack of real volume, it's easy to push them around. I think you're getting a little bit of a squeeze right here, pushing the hogs a little higher.
So you're saying you expect it to be range-bound for a while?
Well, I think they're going to go down to like 70 basis April. So, I mean, that's about a well, from here it's about a $5 move down, and I expect to see that. So, but I think the range is pretty firm right now, 70 to 78, which is how I look at April, and 70 to 66 to 74 in February, which is coming off soon.
Okay, what about the cattle market? We're opening up. We're higher. We're off of our earlier highs, but still higher on the day. The cash cattle trade had a little bit on Friday, and it seemed to be kind of sideways, about steady with what they had earlier in the week.
I think cattle looks pretty good here. I mean, I like the fats. As long as they can hold above 116 to 117, I'm a buyer and I'm a fan, and I think they do look to go higher. I think we might see some choppiness trade here, but I'd look for that to continue. I think feeders have now put in that low we were looking for, and they're going to churn, but I think they're going to go also back higher, and I think they're going to retest those highs they put in a while back. So I think overall it looks really solid and really encouraging here, but we do have some trade that, there's going to be some moments where you're going to feel a little bit of tension, but overall, I'd look to be a buyer of any dip in the cattle right now.
All right. Well, thank you, Todd. Good to visit with you about the markets.
Thanks, Marlon.
Appreciate all the input on that, and a lot going on here on a very short trading week. So we look forward to talking with you again here real soon. Todd, Bubba Horwitz. He happens to be with BubbaTrading.com, and he is based right there in Chicago. So, Janet, there you go. So far, livestock all higher again, but off of the highs.
All right. We'll see what the rest of Tuesday has in store.
Yeah.
Thanks, Marlon.